Hi, this is a little video. It's about 30 minutes long. It's explaining my journal and how you can make it your own. I will have a link so you can download this journal. It's in Excel format if you would like to use it for yourself. Down at the bottom, you'll see that there's several different pages, market profile, pre-market routine, Positive Mojo, market engagement tool, emotional diary, and some trade sheets. So I'll try to go through this quickly, but it's actually a lot to go through. Now this page here is I use for market profile, and what I do is I start this the evening before, and I print this sheet out and fill this in manually with pen and pencil. I'll just briefly go through what this says. So the evening of the 21st, I looked at the market. I get the announcement times for the next day. I write them in here. And I look at the monthly from the big picture down, and all these words and all these phrases you'll recognize from the works of Jim Dalton. He has some great training materials out there. I highly recommend it. So the first one is monthly. So the monthly is re-entering a balance area. It was one time framing down, and it actually stopped. I forgot to put a circle there. But it's very early, because it's been going up forever, and it stopped one time framing going up, and then it broke down, and now it's re-entering the balance. So since it's re-entering the balance, that's a positive, because it could go back to the top of the balance. And since it's one time framing down, that's a negative. So I'll write anything in, and I'm just trying to get the odds. So the weekly, we're late because this is the one that we stopped one time framing down, and we're re-entering the balance. It was one time framing down, 1, 2, 3, 4 weeks. It stopped, so that was late. So it's re-entering this balance area, and this balance you could say that this balance is going on for, oh my goodness, 1, 2, 3, 4, 5, 6, 7, 8 months. So that's why that's late. Now the daily, where I circled location here because I believe that the 50-60 level is an area that we're going to need to watch. So the bigger picture is that we're in balance, and we're one time framing up on the daily. And so balance is neutral, one time framing up is positive. The greatest risk, as I see it, is to the downside. The greatest risk is to the long side. That's because we're close to these levels, 60 and 70, so I put a negative here. Volume confidence, last couple of days is just average, that's neutral. Value. Did the value move with the price, or did it not move with the price? Well, the value moved higher, so I put a positive there. But at the end of the day, it spiked up. And of course, it didn't have the chance for value to move up. So I know that in my mind, I put a negative there. Previous day's inventory, long. I think we're very long. Extremes, there's a positive there because we had an excess low on yesterday, the 21st. Any anomalies? It was elongation. Not much structure there. Overnight inventory was balanced. Greatest risk, as I see it, is to the long side, so that's a negative. in the morning, I thought 42 to 44 was an area to watch for. We opened in balance at the very just barely in balance, just at the very high of the day before. 3 scenarios is to rotate, look outside and fail, or look outside and go. What we did was we looked outside and failed, but it took a long time for that to happen. So that wasn't for me, that wasn't tradable. So once we're into the day, I'm trying to find out, what's the first destination? What are they going for? Well, the first destination I thought was the overnight high. It missed it by 1 tick. That's negative. So I wanted to get short. I actually got long before that happened, but the participants, as I saw it, was scalpers. I believe that they were the inventory was very long, that it was locals. Confidence, low confidence. It just barely, I would say that it was successful, but since it missed it, that is a negative. So the next destination was the point of control and the overnight low. It did trigger the point of control, and it stayed down there. So it triggered a change. It looked like it was going to continue to move lower. I believe that was all long liquidation. And 30-minute bars, it was 1 time framing down. It was a breakdown at this point in the day, and the value was actually developing higher, but it ended as a double distribution day. But at this point, the inventory, the value was higher, but it just started breaking down and 1 time framing down. So that's as far as I got on this day. The next pre-market routine is, this was the first thing that I look at. I had this printed out. I'm a checklist guy. That's why I have this over here. I love checklists. So, wake up, read and pray, or meditate, or whatever you do, eat. I have it all listed out. I also have here, well, this is kind of old, but this was a 25K account if I wanted to do 1% of that. So a 1% stop loss would be 23 ticks if I had 1 contract. If I had 5 contracts, it would be 4 ticks. So I just, and the bonds, these are the ticks for the bonds. So I found that helpful a while ago. You can read through this. It's pretty self-explanatory. These are some of the things that I need to tell myself. Wait for the signal. Don't fight the momentum. That's big for me. One thing that I had to change. Don't guess the turnaround. I used to try to catch that falling knife, and hey, guess what? I don't have to trade today. So this trade sheet, I'll get to that later, but you can print this out if you would like to, just to have it as a reference. So I'm going to go over to the Positive Mojo. If I'm 300 pounds, I'm not going to say, oh, I am 150 pounds. I am 150 pounds, and my psyche is not going to believe that. So I like this saying here. I love the thought that I'm 150 pounds or whatever. I love the thought that I'm seeing the market clearly, seeing the bigger picture, avoiding the chop. I love the thought that I'm calm in anticipating setups, that I'm entering properly, that I'm trading great risk to reward ratios, that I'm being patient and allowing the odds to play out and not moving my stop all the time, that I'm entering at a great location, that I'm enjoying the heat and the slow progression. As soon as I would get into a trade, I would be anxious to get out. So I love the thought that if it's taken a long time to progress, then I know that inventory is building in the wrong direction. They'll have to liquidate sooner or later. So all that slow progression is the other side trying to keep it going against me, and they're going to lose. Of course, if they're correct, then I'll be stopped out. Making adjustments only 10% of the time, and I love the thought that I'm totally comfortable allowing trades to play out without me. I don't have to chase. And I love the thought that setups, hey, guess what? They take a while to set up, so be patient. The next one is market engagement tool, and I'll go through this in a little bit. The next one is emotional diary. I print this out and I write this in by hand. I'll put the date in there and the event. Let's say that I'm in a trade and it's 4 ticks against me. How am I feeling? What do I expect to happen? What actually happened, and what did I learn? Another event may be, I have 3 points into the trade and it's coming back against me, or a couple points and it comes back to my entry. What's my emotional state? What happened? What did I learn from that? And then the last one down here, trade sheets. You can either print this out or keep it on Excel, and I hear my checklist again. I like to do this in order. Okay, number one, is there a pattern that I recognize? The spike, channel, trading range? Is it going up or down? Is it the first thrust? Is it the third thrust or the third thrust pullback? Is there a lean? The lean could be a daily extreme, or an open, or a point of control, or a Fibonacci retracement. I like to do these in order again. So once I see these, is there a trade setup? Major trend reversal, range scalp, a gap and go, gap and trap. I'm just about ready to make the trade. Are there any arguments against it? Am I going against the buy and sell pressure? Is it extended? Is there not enough reward? No lean. I'm still making these mistakes, so I have these in here. No mistakes. Fighting the trend. Poor signal. Sizing. Trading too much. Risk reward. So you get the idea. Trade trigger. What actually triggered me to pull? What actually happened for me to pull the trigger? I can fill these in as I go. The exit. Why did I exit? Did I hit the target? Measured move. Was I stopped out? I can either fill this in, or I can just have this printed and where I can view it and fill this out, print this out, and fill this out as a sheet. So you can get 2 of these on a sheet, and it has the same thing as up here. You just, lean. You can look up here. Well, I know my lean is a weekly extreme, so I can just put in their lean weekly extreme. Okay, so that's pretty much everything. We're going to go from our trade sheets back over to the market engagement tool. This I fill out every 5-minute bar. This just keeps me engaged in the market. Helps me to verbalize, to talk out what the market is doing. And since there's no one here, this is the way that I do that. So the first thing that I look at up here in this corner is the big Y, and that is to be free. I trade to be free. My goals are to trade only setups, to know my risk and reward, and that's big for me, and to trade multiple contracts. This is 10 of 22, and let's just go over some of this. So this would be the first 930 bar. The first 930 bar, I'll show that to you right here. The first 930 bar is right here. And you can see that it was a positive bar. It went up 1 point, just from open to close. I'm not talking about any shadows, any tails at this point. Just open to close, went up 1 point. The second bar went down 2 points. The third bar went down 2 3/4 points. So you'll see how I fill that out. So up 1 point, down 2 points, down 2 3/4 points. So the first one I put a +1 because it went up 1 point. The second one I put a -2 because it went down 2 points. The third one I put a -2, and this is why. I'll put a 1 if it's anything 1/4 positive to 1 3/4 positive. I'll put a 2 if it's 2 points positive to 2 3/4 points positive. I'll put a 3 if it's 3 points positive to 3 3/4. There's no mojo to this. This is just one of the ways that I follow the market. And you can see kind of by this heat map here that that if you have several negatives in a row, I have it turning green because I'm expecting a turnaround. A couple of things that I've noticed is that it often does a pullback at a negative or a +3. That a negative or a +7 is an extreme. And if you hang around a 7 or more, then you're probably going to have a trend day. Don't fight the trend. Okay? So the next column, the first bar was just a simple, there was nothing really, it was just a small bar. The second bar, anything a 2 or higher, I call a spike. And this is, mind you, we've had low volatility for years now. So when I talk about this, a lot of turnarounds at a number 3 or a minor pullback at a 3 or a 7 being extreme, that's for volatility like 17 or less. Okay, so anything 2 or larger is a spike. And you see that I put on there spike, it closed on the low. Let me show you that. This is the second bar here, and it closed on its low. The next one, it closed really close to its low, but it didn't close on the low. So I just make that distinction. So the next one was 2 3/4 points, but I only put a 2 because it didn't make it to 3. And put in there that it was a spike. All right, I didn't put close on the low. Now, if you notice over here, the next line, I have a 5-minute stochastic and a 512 tick stochastic. Falling, it's either neutral, and neutral can be anywhere on the spectrum, high or low, or in the middle, but it's making its turn. It's not falling, it's not rising, it's making a turn. That's what neutral is. So, so my distinctions are neutral, rising, and it's rising and it's at extreme. So the reason why I had this in here is that I found myself getting into trades at extremes, and then either being wrong or having a lot of heat or getting stopped out at the tick. All right, so let's see. So these, you can read these yourself. Spike, 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 and we know that it's a spike positive because it's a +3. This was a doji. It didn't go anywhere. This was a 3, but it has a tail. You can notice that I have an inverted hammer here, a reversal bar. Some of these has big tails, So if it's going up and it has a big tail, that tells me that, you know, momentum is failing. So let's look at a couple of these other things. So I go through this as a pattern. We'll get to the trade that I made here. So I'm starting to notice that we have a trading range. You know, in the very beginning of the day, you won't have much of a pattern. Well, by around 10 o'clock, I'm noticing that we have a trading range, and it appears to be going up. So it could be a channel, but it hasn't really had much of a pullback yet. So we had the second thrust here by 10 o'clock, and we had a pullback here around 10:15. And you know, right here, I see this reversal bar here, and I'm figuring that we're in a channel, and now this is the bottom of the channel. I'm expecting this to go up, and that reversal bar looks like the third thrust. So the stop for me was the signal bar. If you're familiar with Al Brooks's trainings, he has great trainings, great videos. This was a high 2. Arguments against it. Well, we had some pretty strong down bars, so there was some selling pressure there, but it didn't talk me out of it. I really didn't think that I had much of a target there, but I was just kind of anxious to get my feet wet. So that could have been a mistake, probably was a mistake. The trade trigger, I just stopped myself in a quarter above the top of this bar. Time in was 10:20. ES got in at 37.50. I had 2 contracts long. I went with the trend. Stop was 34.25. It was a big stop. That was a pretty big bar, so I could only do 2 contracts. Target was 44.25. Tell you the truth, I didn't think that I would make it there because I had an area, I think, around 42 to 44 that was resistance. That would have been 2 to 1. The actual risk was only 1 point. I exited at 39.75. I forget why right now. And then it came back to my entry, so I got out a quarter point above my entry. And then over here, let's see, this is my timeout. This is the bar that I got out on. A profit of 125. Risk to reward. There was more risk than reward on this one. Exit type it came back to the entry. What were some of my notes? It was a trading range. It was a big signal bar, which I don't like trading that big of a signal bar. And it was not enough reward. So that was really, I probably should not have taken that trade. So coming back down here, I was trading oil and some other things, so I didn't really fill these in. And this was my next trade. As you can see here, we're getting to an extreme, and I don't use that as a trigger. I just see that as a confirmation. Had a pretty big bar there, but I had a Fibonacci level, a Fibonacci retracement level that I was going to enter in on it. So the bar had a tail. The 5-minute stochastic was at both of these were both at an extreme, so that was another confirmation. I believe we were in an up channel. We were on a third thrust. Now here I put pullback number 3 but I realized later on by at least this bar, but that this wasn't a pullback. This was not actually a pullback. So this is still on the third thrust from up here. And my stop was a Fibonacci retracement. Of course, I did not take the trade yet. My trade setup was lean on important level. Arguments against the trade was that there was pretty good buying pressure. It was a channel up. I was no mistakes. I was fighting momentum. But I really thought that this was an important level, so I was going to take it. And sometimes you just got to take the trade. I got in at 11.13 as ES 42.25 was my entry. Number of contracts 3. Got short. I was short. I was going against the trend. My stop was 47.25. Something's wrong there. My stop was 2 points. So one of these is wrong. My target was 31.5. My risk to reward was 5-1. Actual risk was only a point. My first exit was at 2 points. My second exit was at 4 points. In my third exit, I got stopped out. I had a trailing stop. I got stopped out. I got my time was here. The bar that I got stopped out on was here. Profit of 562. That was almost a 2-1, if I have this figured out correctly. Had a trailing stop there, and some of my comments from today was trading range. It was struggling to get above 41, and that was a level that I was interested. It was an overnight fib level. I shorted it. I felt comfortable all through the trade. It was a good R&R. At this point, it almost stopped me out, and at this point, it broke the channel. I felt, of course, really comfortable here, and then it stopped me out almost to the tick. And I should have looked at the 512 Stoke, because when I got out, it was at an extreme. So it probably wasn't going to go much higher. That's what that was telling me. I could have given myself a little more room. So the last thing I want to show you about this is that I have these things over here. And teach you something a little bit about Excel if you didn't know this. I didn't know this. I had to figure this out. You recognize this from some other screens, but let's say that let's look at this column here, arguments against. If you would like to change this drop-down menu, I'll show you how. And you can do this with the trade setup or leans, anything. You can make this your own. I'll show you how. You highlight everything there, right? You come over here to where these things are. Okay, and make sure you don't press down on the key because you have to have those things highlighted. So you see here the arguments against. And so everything that's listed here is in that drop-down menu. And this is how you get to it. You see up here the home, insert, page layout. Well, if you go to the data, there's a spot over here that's called data validation. And I press this little box here. And you can see what's highlighted here. So if you don't like, the DOM, depth of market back ticking as an argument against, taking your trade, then you leave that out. You can change it. You can add more to it. So that's all you do is highlight it, hit enter, And okay, and that's how you do that. And you can make this thing your own. It took a lot of work to put this together. So I hope that you enjoy it. I hope that whatever the contest is, that you, if you have to put thank yous or whatever it is, number one, I just hope that you use it and you get some use out of this thing. It's really helped me. And of course, I would appreciate the thank yous. I'd love to do a combine at some Top Step. So enjoy. If you have any questions, you can email me, or I'm sorry, you can hit me on the forum. And big thank you to Big Mike's Forum. I've learned so much here, and just everybody have a great trading career.